Hello everyone, welcome to the daily market update. In this video, I will be discussing about the current market situation, about today's updates, and what's the game plan for tomorrow. So, without further ado, let's start our analysis with the weekly time frame. So if I jump on to the weekly time frame chart, as you can see over here, there is no major update as per se because this is the first day of the week, and the best part is we are holding as of now the 26-day moving average, that is the red line over here. So as suggested on the last Friday's video, we have bounced from the Bollinger Band low of the weekly time frame. Now, as of Monday, as of today's closing session, we are holding the 26-day moving average very nicely. So until we break down below that level with high volume, we are still bullish. Now let's jump on to the daily time frame. So in the daily time frame, if you see, there are a lot of updates that I want to share. So first, looking at purely the price action, the support zone that I have drawn over here, that is this one, has been held multiple times. So first, on August 18th, it held very nicely. Also, since September 26th, the entire week, we had a lots of long wick. That represents that there is a lot of buying pressure in this zone. So I have drawn this zone, and even today, if you look at the daily time frame today, we have bounced exactly from the lower end of the Bollinger Band and also from the 150-day moving average, that is this zone. So on the daily time frame, one more important observation is we are being selling off since 1, 2, 3, 4 days. So obviously there was a rest day expected. Obviously we had an inside day today, but one key thing here to note is we have broken the lows of previous day, that is this one. But on the contrary, we have not broken the highs of the yesterday. So that still suggests that there is a lot of selling pressure. Now, also as the time of the recording, we have created a doji. Doji over here means indecision. That means neither the buyers nor the sellers are dominant. So, and that is expected from a classic Monday like this. Why? Because we have a lot of news events coming on this week with big tech earnings. A lot of big names are going to release their earnings. So naturally, those big tech earnings are going to affect the Nasdaq markets, and everybody seems to be waiting for it. So that is why we also got a doji over here. Now, for those who are professionals who are doing intraday trading, let's jump even more deep into the intraday time frame. So in the intraday time frame, it is very important to notice the fine details. So as you can see over here, we opened a trading session very bearishly. So the first 15 minutes over here, if you see, it was really bearish. And mind you, these candles are relative. So just because we have rallied doesn't mean that this fall was small. Look at the fall. It was almost, starting the highs of the range to the lows of the range. It was 115 points on the index. So obviously going into the start of the session, it was very negative. But slowly but surely, we had a very big green candle, almost of 76 points, and that too with high volume, right? And also notice the levels from which it got rebound. So remember the daily charts over here. The daily level was the end of the Bollinger Band, that is lower end of the Bollinger Band, and the 150-day moving average. It bounced exactly from here. And also remember that today there was no big news event. So over here, if you see October 23rd, before the market opens, there was just one news, and then it was just a 3-month treasury auctions and whatnot. So we don't have a big market moving catalyst for today. and that is why the bears got trapped over here. That is why we see that from the daily support, that is from this zone, we bounced back very quickly. But even after that, we were not supposed to trust this up rally. Only after closing of this candle, that is the 5 minute candle, which is the fourth one after 6:45 Pacific time, then we waited for confirmations. We waited if it can clear this zone. Now this zone is coming from the most famous exponential moving averages. So once we got the crossover, only then we had a confirmation that okay, yes, we are going to rally today. So it is very important for the traders to wait for the confirmation and to know and let the price action do the talking, and rather than doing otherwise. So these were the insights of today. Also, if you notice over here, once we reclaimed the green line, that is the pivot level for today, we never looked back. So even that was a big indication that okay, we are breaking the pivot points, that is support S1 with a very high volume, and we have conquered the initial selling in the day. So that means this was just a trap. This is exactly how liquidity, how the retailers get trapped into the liquidity zones. Also, one key thing to note over here is today, intraday, we had the VIX, that is the volatility index specifically for Nasdaq, which is the ticker symbol VXN. Even that had the resistance over here. If you see, this is the 5 minute chart, and this is the resistance over here. So this was also one of the key indications that we might have a rest day, or we might have a rally day today. Now, coming on to the daily time frame, looking at these levels, don't think that okay, now we are out of the woods, and just because this one day, now we are back to rallying. One important thing is, on the daily time frame, we need to defend this level in order to rally. Now, until and unless something breaks out on the top end or breaks out on the short end, we still have to become patient. If you see intraday, this sell off, or these highs are coming on to the closing part of the session, which is really not a good sign. So if the market is really strong, then we don't have to see this kind of action, especially in the closing hour of the session. So be very, very mindful of all these details. And as I said, for the bulls to hold on, this support zone needs to be defended. If this doesn't get defended, then we have a lot of downside to come. Now, if you look at the moving averages, they are suggesting that we are building below the 50-day moving average a lot. So that means there is a lot of downside to come, but we will let the price action do the talking, and then patiently wait for the trades. Coming on to the earnings season and the news events, we have a lot of earnings this week. So if you see, Apple is going to report on November 2nd, that is next week. Microsoft is going to report tomorrow, that is Tuesday. Meta is going to report on Wednesday. Amazon is reporting on Thursday. So we have a lot of big tech earnings reporting their earnings. So this week, expect a lot of volatility after hours, because they will be reporting after hours. So refrain yourself from taking big positions overnight. If at all, if you see good opportunities, then do it intraday. For all you guys who are swing traders and who are long-term investors, if you see a big drop, then this will be a really good time to go with the index only. Index meaning QQQ. So if you see over here, QQQ is an ETF which mirrors Nasdaq. So for all you guys who are swing traders and who just want to invest, probably this will be a good time to get in. Always remember to dollar cost average. Don't go all in at once. So I would suggest, if you have $100, then deploying $25, that is 25% of the capital, would be really, good strategy. So this is my analysis for today. To sum it up, all in all, not a big day because we did not take out the previous day's high, but we did take out the previous day's low. So I'm just waiting for the earnings season. I'm just waiting for the market to digest the earnings, and then after the November 1st, after the Jerome Powell has its FOMC conference, then we will be in a clear position to decide what is going to be the course of the market. But until then, keep an eye on these levels, and that's all for it today. So thanks for tuning in, and I'll be posting daily market updates and my reasons and my analysis every day. So feel free to jump in, and thanks for viewing.